Puerto Rico is a tax haven for American citizens. So income generated while in Puerto Rico is not subject to U.S. taxation. It can be taxed in Puerto Rico. Now, when it comes to crypto investors, if you register for a special tax incentive program that they have called Act 60, you can unlock some remarkable benefits, most notably a 0% tax rate on capital gains for assets appreciated while you're a bona fide resident. When it comes time to file your tax return, the process gets interesting as Puerto Rico operates under its own tax jurisdiction separate from the IRS. This unique setup makes it a hot spot for investors looking to optimize their tax strategy legally. So how does this actually work in practice? Let's take a look. So the capital gains that you enjoy while in Puerto Rico, the gains that occur while you're living in Puerto Rico, are subject to a tax of 0%. And when you file your tax return, it's kind of interesting. So let's say I bought assets for $10,000 before I moved to Puerto Rico. When I go to Puerto Rico, the value of those assets are $15,000. And then while I'm in Puerto Rico, I then at some point in time sell them for $30,000. So when I sell it, part of that gain occurred while I was living in Puerto Rico, but part of the gain occurred while I lived in the United States. So when I file my tax return, this is kind of how this looks, a little techie, but I would file a U.S. tax return, but I'd only report the gain up to the $15,000, so a $5,000 gain from $10,000 to $15,000. And then on my Puerto Rican tax return, I'd report the gain from $15,000 up to $30,000, or a $15,000 gain. But that $15,000 is taxed at 0%. So the U.S. government tax return does not show that that asset was sold for $30,000. It only sees the price of the day you entered into Puerto Rico. So that's kind of what's going on. There's a limit to how much the IRS really knows about the capital gains that people are making in Puerto Rico. There are a couple avenues by which the IRS will trigger an audit for someone who's taking tax advantage of being in Puerto Rico. And they generally come down to residency rather than looking at your income numbers directly. So residency, there are a set of complex residency rules which involve that you have to be in Puerto Rico more days than you are in any other country in the world. You cannot be in U.S. more than 90 days, including travel days. So between those two rules, that sets up some real complexity. You also have to shift your abode, that is where you dwell, to Puerto Rico. And I have met people in Puerto Rico who have actually maintained a second home in the U.S., and they have maintained a car in the U.S., they've maintained a U.S. driver's license. They've pretty much maintained all the trappings of living in the U.S. You know, the issue is Puerto Rico your first home, or is it the other country, U.S., the state we're living in? And basically the closer connection rules on Form 8889 are pretty clear about those closer connections are going to work against you. So I think those people are at risk. Secondly, I think they're at risk because they don't comply closely enough to the minimum days in Puerto Rico rule and the maximum days in the U.S. And the IRS can come back and audit those at any time. The other rule that you can run afoul of is the first year you go to Puerto Rico, if you're not present in Puerto Rico on January 1st of that year, so let's say you come on January 2nd, decide you're going to move to Puerto Rico, but if you're not there all 365 days, it's a day short or more, then that's called a short year. And on a short year, you have to live in Puerto Rico 3 full years following the short year. And if you fail to remain a Puerto Rican resident for those 3 years, then the U.S. government can go back and deny your Puerto Rican residency benefits for the first year. So if you made a lot of gains in that first year, that short year, and you don't comply with remaining there for the next 3 years, you're at risk for them auditing and claiming those things. So There's allegedly a team of people that look at this stuff, but they're not working too hard from my vantage point. But this is why people go to Puerto Rico. Not necessarily that they're not getting audited, but that they can benefit from 0% capital gains. There's lots of people in different walks of life. It's not just the richest. It is complex. You have to give a certain amount of money to charity. There's some legal fees, accounting fees. It's not a trivial event, and it's a commitment of multiple years. So, you need to think about where your kids are going to go to school, if you're willing to give up a house in the U.S., car in the U.S., and things about that. Give our office a call. I can talk to you through all that. I have clients in Puerto Rico who we have helped through these transitions. I'd be happy to talk to you about it.